Trade tensions between U.S. and China heat up as China now this week bans export of critical minerals. This comes following Trump's threat to levy even more tariffs on trade partners, including China, last week. Some of these critical minerals are crucial for not just industry, but also defense, leaving the U.S. potentially vulnerable on a geopolitical system and scale. We'll talk about what this means for investors and what this means for the West overall. With our next guest, Scott Eldridge. He is the CEO of Military Metals Corp, ticker MILI. We'll talk about his projects as well. Very interesting projects based in Europe and Canada. Scott, welcome to the show. Good to see you.
Thank you for having me, David. And I'm definitely an avid viewer of your always insightful interviews. So it's a pleasure to be on the other side.
Well, it's a pleasure to have you on the show. Scott, let's address the news article that I referenced in my introduction. China bans exports of critical minerals to U.S. as trade tensions escalate. A few minerals were banned: gallium, germanium, antimony. We're going to focus our discussion on antimony today because that is one of the core critical minerals for defense. We'll talk about the pillars of the use cases of antimony, and it is the metal that you're involved with right now. Antimony, what is it? What does it do? Why do we care about this story?
Right. So, David, antimony is a strategic critical mineral used in all manner of military applications. And it has several other significant demand pillars that are outside of the defense sector. And we can chat about those as well as we proceed. But as you mentioned, December 4th, China announced an export ban of 3 metals to the US, including antimony. And despite that being a significant headline, that was sort of an escalation of an announcement that we saw back on September the 15th, where China announced an export restriction of antimony. So now they've taken this to a whole new level. And the US, as well as Europe, are caught unprepared. The US and Europe have been heavily reliant on China as an antimony source. And it's important to note, just as a backdrop, that China, Russia, and Tajikistan, which are collectively 3 unfriendly countries to the West, control over 80% of the mining reserves for antimony. China has about 50% of those reserves. And what's very important with any of these minor metals is the midstream processing. So at the mine site, with antimony and the other minor metals, such as rare earths, for example, you're not producing a commercial product at a mine site. It's a form of a concentrate, and that needs to be smelted and refined. So China controls about 50% of the world's midstream antimony processing. So we've been heavily reliant on China, and we're certainly ill-prepared for this recent move.
Let's review what the Chinese Ministry of Commerce said about this development. So a Chinese Commerce Ministry directive on dual-use items with both military and civilian applications cited national security concerns. They said, in principle, the export of the critical metals we mentioned, gallium, germanium, antimony, and super hard materials to the United States shall not be permitted. Okay, but the question is why? I mean, why are they targeting these specific minerals as an export ban, and why should it not be permitted from their perspective?
This is all part of sort of underlying geopolitical tensions we're seeing around the world. It's being manifested in the form of trade restrictions. So this all falls under that umbrella. But there's a key term there that you mentioned, the dual-use metals. So the dual-use portion means that they have civilian and defense sector implications. So during times of increased defense activity around the world, those countries that have these key metals to support the defense industry basically want to keep it and hoard it for themselves, so that they are better prepared than their adversaries.
Says here, gallium and germanium are used in semiconductors. So we've talked about that a little bit already. While germanium is also used in infrared technology, fiber optic cables, and solar cells. Antimony, the focus of our conversation today, is used in bullets and other weaponry, while graphite is the largest component by volume of electric vehicle batteries. The move has sparked fresh concerns that Beijing could target other critical minerals in another ban. So what happens if, let's say, the nation runs out of antimony? In the worst case scenario, what does that mean?
Well, if we look specifically at the US and Europe, collectively just referring to them as the West, basically defense sector inventories were already at concerningly low levels before the US started to support, along with other European nations, the defense of Ukraine. So we started off with coffers that were not full. We've been contributing to Ukraine, and now all the inventories for ammunitions, armor-piercing bullets, flame retardant fabrics for soldiers, night vision goggles, ammunition primers, flares, tanks. These are all at alarmingly low levels when we're seeing increased defense activity around the world. So what is the solution? The governments around the world are in a scramble right now to figure that out, and they're starting to commit significant amounts of capital to try and solve these problems, to the tune of billions of dollars, David.
Okay, so are you suggesting that the US and its allies are not critical minerals independent? I mean, I'm using that term because energy independence was a major geopolitical theme, and it still is. And the US developed its own energy dependence through fracking, as you know.
Yes.
Nothing of that sort has been done for critical minerals yet.
You're right. And we've just been so reliant on China that we haven't had to go out there and explore and find new antimony and other critical mineral deposits. So we've been basically behind the eight ball for the last 2 decades. There hasn't been antimony produced in the mine for 20 years. And now it's time to play catch up. And the world is sort of catching on as to how important antimony is. There was an interesting Forbes article back in 2021 that said, as the title, antimony is the most important mineral you've never heard of. And that's now 3 years ago. And that proverb resonates even truer today. Antimony is key for the defense industry. It's also widely used in solar panels, in addition to fire retardants, as we talked about as well.
Okay, so now that this ban has taken place, assuming it's not going to be lifted anytime soon, you said that the West is scrambling. What does that word mean, scrambling? What are they doing in response?
Well, let me give you a specific example. So if you've heard of a publicly listed Canadian company called Perpetua Resources, they're developing the Stibnite project in Idaho. And this is a past-producing antimony mine. Going back to World War II, it had production at a small scale. A Canadian company has now come in there and drilled to find a significant gold deposit, and it has an antimony byproduct to it. The grade of the antimony on that project is 0.07%. And the US Exim Bank, combined with the Department of Defense, is in the process of committing $1.84 billion to that project to build a gold mine that has an antimony byproduct. So they could really care less about the gold. What they're very focused on is a domestic supply of antimony. And the fact that it's a byproduct, that tells you how dire the straits are here.
Well, we'll talk about your projects in more detail in just a bit, but generally speaking, is antimony only a byproduct of gold?
Good question. Yes and no. Most often it is a byproduct of gold mines. Antimony is in almost every deposit around the world associated with gold, but the ratio of the grades can differ. And we'll talk about our projects in a minute, but we wanted to target brownfield projects that had a higher ratio of antimony to gold, because we really want to give our investors a pure play antimony opportunity in our company.
Antimony prices. Give us a sense of what the price action has done over the last year. If you take a look at my screen here, there's various news articles of how the price is done. It's just exploded in a straight line. Price of antimony trioxide, Europe versus China, dollars per ton, right? What contributed to this straight line upwards this year?
Right. So for the calendar year, David, as you know, antimony is the top performing commodity, just ahead of gold. And the price of antimony, as you can see from the chart, did spike significantly before December 4th, even before September the 15th. So there's basically been a supply crunch. With China turning off the tap to the Western world, means that the market is actually in a deficit of probably 10,000 tons. And there's no solution of any mine that can come online tomorrow to solve that problem. So it's basically the imbalance of supply and demand that's contributed to this spike, and people waking up to the fact that antimony is critical to the defense industry. And it's important to note that there's essentially no replacement. And it's also price inelastic, which means that we could see these prices sustain or even go higher because antimony content in any of the products that it's used for, whether it's defense or renewable energy, it's typically under 5%, more like 3 to 4% of the actual material or cost to build the product. Therefore, meaning that it's price inelastic. So we're believers that the price will sustain here, if not go higher.
So let's talk about how critical the use case could be. In 2011, I remember back in 2011, the news articles around gold were that because gold had then reached its then all-time high, a lot of industries, companies in the semiconductor industry in particular, they used less gold. So they started a process called thrifting, whereby they used less gold in their chips and their phones and whatnot. Could this, in theory, happen with antimony, where people just use less of it?
Yeah, in theory, the answer is yes. I mean, there's replacements for everything, but it's always a cost benefit analysis and whether or not you can actually get the material. But as I pointed out with my previous content, the antimony used in any of these projects is so small, under 5%, that we haven't seen any changes in demand with the spiking price, which has now touched $38,000 a ton in Europe.
Okay, so you mentioned some other applications of antimony: flame retardant, lead acid batteries, high quality glass, photovoltaic glass, alloy agent, semiconductor production, and of course, military equipment, which we already talked about. So walk us through the 4 to 5 pillars of demand for antimony, and which pillars you think will see, barring the critical minerals ban, but just on its own, which pillars do you see the most demand growth going forward?
Right. So the largest component of demand is solar, and solar has sort of now emerged as the top renewable energy source. And basically, antimony helps eliminate bubbles in the glass, which makes a solar farm more efficient. Staying within the renewable energy space, it's also used in the cooling rods of nuclear reactors because of its properties to not transfer heat. And then stepping outside of that, we've talked at length about the defense applications. And then it's also used in lead acid batteries, semiconductors, and circling back also to the flame retardant aspect. It has flame resistant properties, so it's used in a lot of clothing, and all first world electronics also use the flame retardant component of antimony to help prevent the spread of fires.
Okay.
So unlike other critical minerals, David, as you can tell, you have these multiple different demand pillars, which really means that antimony is not just for the defense sector and it is not a one-trick pony.
Right. And the government is scrambling to find a solution. What is the private sector doing to meet this deficit, this demand gap?
Well, around the world, where we have our mineral projects, which are geographically diverse, so we're exposed to Canada, the US, and the EU, and each governing body there has stepped up to the plate with different funding mechanisms. But as far as sort of the venture capital markets are concerned, groups like ours have recognized antimony and other critical minerals as an opportunity to gain exposure for investors, because antimony is not traded on a spot market. There's no futures contracts. There's no ETFs. So the only way that investors can get exposure to the metal is through the equities, like our company. So we saw a storm brewing here going back about 12 months ago, where we wanted to create a vehicle that gave investors exposure to brownfield projects, as I said, that had that higher antimony to gold ratio, knowing full well that there would be this defense sector demand coming, which is sort of the tail that wags the dog now. But another layer to that is all the government funding that we're now seeing that's going to help support these projects outside of the ECM and debt capital markets.
Okay, well, you operate in Europe. We'll talk about your Slovakia project in just a bit, but because you're in Europe, this is relevant to your company. The Critical Raw Materials Act of the European Commission. So the Critical Raw Materials um, Act states that these are indispensable for the EU economy and a wide set of necessary technologies for strategic sectors such as renewable energy, digital, aerospace, and defense. The Critical Raw Materials Act, CRM Act, will ensure EU access to a secure and sustainable supply of critical raw materials, enabling Europe to meet its 2030 climate and digital objectives. What does this mean for the industry? What does this mean for investors? The um, the government response to this growing demand. How does this impact the markets?
Right. So this has created tremendous tailwinds for us. The Critical Raw Materials Act in Europe is somewhat similar to the Inflation Reduction Act in the US, and it brings many benefits to companies that would like advance projects where that particular metal is on the list, and antimony is number one there in Europe and the US. So the Critical Raw Materials Act in Europe has done something very significant that we're missing in North America, and they've actually inputted here a fast track permitting process.
Mm-hmm.
So if you apply, and we would certainly qualify, we actually already have a national designation for this being a protected deposit by the government of Slovakia. But in addition to that, we'll be pursuing that classification with the EU. And it also comes with a plethora of funding opportunities. We've had multiple conversations with equity opportunities, funds in the form of non-dilutive financing for the company, project finance loans once we get to that stage. But the real takeaway from this piece of legislation for me, David, is the fast track permitting process. So that's something that we've not seen yet in North America, and that's something that the local governments here should certainly be thinking about.
Well, how fast is fast enough? Because according to this document here, with this page, the EU demand for rare earth minerals is expected to increase sixfold by 2030. That's only less than 6 years from now, 5 years from now, and sevenfold by 2050 for lithium. EU demand is expected to increase 12-fold by 2030 and 21-fold by 2050. Today, Europe relies heavily on imports, often from a single third country, and recent crises have underlined EU strategic dependencies. Yeah. So, can your supply? I'm not saying you in particular, but can supply increase by sixfold in the next 5 years?
Within the continent, absolutely not. So as it stands right now, Europe produces about 3% from domestic mines of the critical minerals. The goal of the legislation is to increase that to 10%. So that obviously tells the story that Europe is heavily reliant on importing from other partners. They call it friend sharing. But to go from that 3 to 10%, that's more than a 3x increase. And that creates that opportunity for us where we're going to have the necessary support from domestic and EU level governments to move our project forward so we can help participate in that domestic mining goal.
So, what's the new permitting time that you're looking forward to?
So the legislation, David, states that your environmental permit and your mining permit and your social permit should all be received in less than 24 months.
Okay, which is a
Whereas if we look at the US, it's widely spoken that discovery to production is 20 years. So this fast track opportunity is definitely music to our ears for our European flagship asset.
Do you think the climate objectives that the EU and some other government agencies have set prior to this have hindered the progress of mining and thus led the European Union to this situation today?
Well, Europe is a fairly small continent in terms of geographic size, but it's fairly densely populated. The population is larger than the US. So the key there is to identify attractive projects that are not encroaching on civilization. And that's what we've identified with our project in Slovakia. So Europe has been heavily reliant on North America, Australia, Africa to import its raw materials. And with the increased geopolitical tension, particularly between China and the US as the two largest economies, Europe is recognizing the risks of not being able to secure these materials, and they're starting to take action, and they want to see these minerals produced locally within the EU.
Okay, so let's now talk about your project in Slovakia. It has a rich history, the project itself. Tell us about that.
Right. So I first traveled to Slovakia 12 years ago when I was a mining analyst. And I had an opportunity to go visit a past producing underground copper, silver, antimony mine. And that was the first time I'd come across antimony. So I've sort of been learning about it for the last 12 years. And as a full-blown EU member and using the EU currency, Slovakia is definitely a strong place to do business. The capital there is Bratislava, and our project is probably about under an hour drive outside of the capital. So it's far enough away that nobody will notice, but it's also surrounded by amazing infrastructures. So we have road access, power, labor and logistics hub nearby. So this is by no means a high cost opportunity to explore or develop, given all the infrastructure. It's world class. And a brief history of the project, this area of Slovakia has actually seen mining going back to the 1400s for gold and pyrite. And about 3 kilometers from our project, which is called Trojarova, there is a past producing antimony mine called Pezinok. And according to the records, during World War I and World War II, this was Europe's second largest producer of antimony. So there's a very rich history here of mining, but specifically mining for antimony. And it's interesting when you drive around Bratislava or the other small towns in the area, they all have these little interesting mining museums or rock shops that you can visit. So
Yeah.
this is a part of Europe where people have been mining for generations, and dinner time chats at the table with grandma and grandpa are talking about the mining history here. So it's a very friendly place to be.
Several different estimates from different times. 1989 estimate, initial drilling program revealed 1.665 million tons. And then 1995 estimate, the most recent historical resource estimation based on the Trojarova edit underground exploration provided a more conservative estimate of 0.415 million tons. Are there any estimate updates?
Yes. So this is an interesting project, David, because as you can see from the image there, that's an adit that allows you to go underground and start to see the mineralized stibnite veins that host the antimony. And there's about 1.7 kilometers worth of underground workings. In addition to that, there was 15,000 meters drilled on the project. But just the timing of the need for the metal in terms of metal prices, this project was never actually put in production. So oftentimes, when a company would acquire a brownfield site that was a past producer, there would always be this discrepancy of, okay, what's the historical resource, but how much of it was actually exploited? So in this case, none of it was exploited. So that full 15,000 meters worth of drilling that defined the Soviet era resource is still there. And there's a series of different reports on this project, just volumes and volumes of data that our 4 geologists are now going through now over in Bratislava. But the most relevant resource alternative that we'll be moving forward with, and we need to convert this to a national instrument 43101 resource, is about a 2.5 million ton deposit that grades 2.5% antimony with a gold byproduct of 0.6 grams per ton. So to put that in perspective, there's about 60,000 tons worth of antimony in the ground here. And at today's prices, there's well over $2 billion worth of this critical metal in this deposit.
So if we were to take a look at your timeline for the Slovakia project, what are we looking at next for the next milestones?
Right. So as I said, our team is over there right now, and they're going through the historical drill core, all of the logs. And what we need to do is convert this Soviet era resource into a modern National Instrument 43101 resource. We think we can do that within the next 6 months. Immediately after that, we would engage in a preliminary economic assessment, a PEA, and this would give a snapshot of the economics of the project, the NPV, the IRR, the payback period, looking at capital costs, production costs, life of mine production, all those sort of metrics. And from there, we would move it into a feasibility study. But
Okay.
David, just to point out, given that this is a high-grade underground project surrounded by infrastructure, we feel that the capital cost here on a back-of-the-envelope basis will be very minimal compared to other projects. And oftentimes you'll see juniors that have $1 billion CapEx, and there's never a thought that they could ever advance the project themselves, but we certainly can here.
What's the long-term objective? Are you going to take it into production?
Well, we've definitely had some interest in terms of strategic partners, would be suitors down the line. Our team has a background that we could certainly bring this forward and put it in production ourselves. So we most certainly do not have the for sale sign on the lawn, but if the right suitor came along with the right offer that was amenable to the shareholders, then we would strongly consider that. But we're committed to moving this forward ourselves.
Let's talk about your other project in Canada. So this is your West Gore project. Tell us about that and how it differs from the Slovakian project.
Right. So this is a brownfield site again, where this mine did have previous production during World War I. So this was a high-grade underground antimony mine with a gold byproduct. And again, they would produce an antimony concentrate. And at the time during World War I, that antimony was barged over to the UK to support the Allied war efforts. And since that historical production, there has been some more modern exploration conducted on the project, and it's demonstrated excellent grades. 7 meters of 3.4% antimony with a 10 gram per ton gold kicker in there as well, 10 meters of 1% antimony. So what we would want to do is dewater the old mine workings here. They had historical production from 3 mine levels, so we need to get in there and dewater that. And we would want to reactivate exploration on the project because we strongly feel that, number one, they did not exploit the old resource. And number two, it's also open along strike and open at depth. So we feel there's an opportunity here, just like in Slovakia, to drill out a resource, being our secondary project in Nova Scotia.
Well, how did you come to acquire this property? Like you said, it has a long history of going all the way back to World War One.
So it was previously owned by another public company, and perhaps just bad timing, but they were unable to raise money to move the project forward, and we were able to negotiate a deal and acquire it from them for advantageous terms.
Okay. And similar kind of outlook and timeline for West Gore as the Slovakian project?
Well, you can see from the image there some of the old mine workings. So all of that has been stripped away. So the geological opportunity here is just as robust as Slovakia, but I think we'd be looking at a longer timeline here, David, because in Slovakia we can get to that resource much quicker within the next 6 months, whereas here I think we're probably 1 to 2 years away from a resource.
Has the Canadian government shown any interest in subsidizing or helping with the permitting and the drilling? I mean, presumably this is a critical mineral that the government needs, right?
Well, that's a good question. So essentially, the government of Canada has committed about $4 billion, just under $4 billion at the federal level for critical minerals. It's more geared towards the EV sector, I would say, but antimony is still on Canada's critical metals list. So we haven't had any direct discussions yet with the government, but we are aware that there's definitely funding and fast track opportunities available to us.
Okay. So here is a chart of the stock Military Metals Corp, ticker MILI on the CSE. So it's up over the last year about, if you just take the lows from the last 12 months to the peak, it's up more than 600%. To the peak, it's up currently about 500% to current levels. So walk us through this tremendous rally here and then this very sharp decline and then a recovery from this decline. Walk us through this whole timeline here for the last 12 months.
Right. So as you're looking at sort of a 1 year chart here, you can see a significant run up, and that's great for all of our shareholders.
Was
But
that was
it
a lot of
also
that was due to the run up in antimony, was it not?
correct,
Yeah.
correct. So other antimony pure plays, which there aren't very many of. There's a few in Canada. There's a few on the ASX. They've all followed a similar trajectory with share price appreciation in terms of percentage. Um, and any activity like this, when you look at an attractive chart, will attract positive and negative attention. So on November the 25th, that's when we saw a significant sell-off for the next 2 days. And we believe that we were the target of a short, in fact, a naked short. And there's institutions in the US that are able to target Canadian companies and attack them in this fashion.
Hmm.
And furthermore to that, there's now an industry arm that's been created called Save Canadian Mining. I'm not sure if you've heard of that, David, but it's sort of run by Terry Lynch and then financially sponsored by big names in the industry like Eric Sprott, Keith Neumeyer, Robert McEwen. And we're not the first company to be attacked like this. It's happened many times before. And just the nature of Canadian mining stocks, if a metal gets hot, if a company makes a discovery, you can see charts that look like this fairly frequently, and they become opportunities for naked short sellers to attack the company. So we believe that's happened here. So what we're trying to do now is just spread the word of the company and try and drive buying into the stock to squeeze out that short. And you've seen that in tremendous volume, trading millions of shares a day, far more than any of our peers.
Well, I think investors are probably just wondering what management is doing to perhaps mitigate the risk of this happening again.
Well, I mean, we'll start to participate in the Save Canadian Mining movement.
Hmm.
Um, there's a lot of money being deployed into that. Lawyers are involved, CROs involved. And as a group, as Canadians, we need to protect our company. We need to protect our country. We need to protect our capital markets, protect our investors. We all think that all investors are created equally. Well, that's certainly not the case, as you can tell from this short attack. But nothing has fundamentally changed in the company for a negative. It's all positive here with advancing the assets, increasing demand for antimony, the supply crunch. And we certainly don't need to raise money here, which is a benefit to our shareholders, that there would be no dilution at these levels.
So this is from your investors presentation dated November 2024. Your current share structure as of the date of this presentation is as follows. I'll just leave it on the screen. I won't read out every single number. Are you expecting any changes to the share structure? And can you comment on roughly how much the float is company or management owned versus public owned or institutional investor owned?
Right. So management and insiders, we own about 20% of the company, and we also control a bulk of the warrants that are in the cap table. Most of the warrants are in the money, and we're seeing them being exercised by people that are supportive of the deal. We don't have any institutional investors in the cap table yet, but there are several funds where the fund manager owns it on a personal basis.
Hmm.
And as I said before, we don't need to raise cash. We're well funded for our plans for the short and medium term.
So on that note, you don't see any changes to your capital structure next year?
No.
Okay. Excellent. Well, we've talked about your milestones. We've talked about your timeline. Tell us a little bit about us, or you rather. Tell us a little bit about you, Scott, your professional background leading up to Military Metals. Well, first of all, how long have you been involved with this company?
So I joined as the CEO in September. So this is relatively new for me, but our group had been starting to put together an antimony vehicle going back as far as 12 months ago when we saw a storm brewing in space. But going back to my bio, so I originated out of the insurance industry. I decided to go back to school and I did an MBA in corporate finance. That catapulted me into the mining business. I've been doing this now for 17 years. I've been a buy-side analyst, sell-side analyst. I've run my own merchant banking firm, sourcing capital from Europe, raised hundreds of millions of dollars for Canadian companies. I switched over to the issuer side of the business when I joined the management team of a company called Amarillo Gold. We were developing gold assets in Brazil and wound up getting bought out by a larger company called Hochschild. I now work for a group out of Vancouver called the Bowering Group, and we run multiple different publicly listed companies out of our office that your listeners are probably familiar with. Some of those names would include Apollo Silver, Prime Mining, American Lithium, and Military Metals.
Your background says that you've also worked a lot in the lithium sector prior to Military Metals. What drew you to the critical minerals sector in the first place?
Well, there's certainly overlap between antimony and lithium, given that they're both critical minerals.
Yeah.
And I had been working on a hard rock lithium project in Sweden. So I've developed a lot of relationships with various people in the European Union as it relates to the Critical Raw Materials Act and funding mechanisms through them. And all of those relationships are certainly being brought into military metals now.
Well, fantastic. I appreciate your update. Very important news coming out of China. So thank you for that. Where can we learn more from you and from your company?
Yeah, David, it was a pleasure, and appreciate your time to conduct the interview here. So if the viewers want to find more information on the company, it's www.militarymetalscorp.com, and there's also an opportunity there to sign up for our news releases.
All right, put a link down below. Thank you very much, Scott. Thanks for joining the show. We'll speak soon. Bye.
Thank you for having me, David. Take care.
And thank you for watching the show. Don't forget to like and subscribe and follow Military Metals. Link down below.